As a stock market investor, I am always looking for signals that foreshadow to me what the future holds. And the signals that I am looking at right now are telling me that we are in for a 2021 stock market crash. In fact, when I started preparing this video, it was just going to be another high yield dividend stock video. And don't worry, I will cover that today. I just bought a high yield dividend stock at a price earnings ratio of 11 with a 5.8% dividend yield. So I'm really excited about that. And I was going to just share a video about that. But then when I did so, I started thinking about the last time that I did a high yield dividend stock video. In fact, my entire strategy for 2020 was supposed to be about high yield stocks. Some of you may remember I did a video last December, is very popular, about my favorite high yield stocks. I'll share that on the screen right now for those of you that may remember seeing the thumbnail. You may remember seeing this video. I will link to it in the description below. At the time, the reason I was looking at high yielders is everything else had taken off. Everything else was kind of out of touch with reality, and all that was left were a handful of stocks that were not even really pure play stocks, if you will. I kind of look at these more as bond proxies, if you will. And the high yielder I'm going to discuss today, the 5.8% yielder, it's PPL Corporation, by the way. That one, I look at it as a bond proxy, but last December, I was going to make that my entire strategy for 2020 because that was all that was left. That's all that was left. Everything else had skyrocketed. And when you fast forward to today, I was going to make this video just about this high yield stock that I bought, and I started remembering, wait, if I'm buying high yielders again, if I'm focused on high yielders, if I'm doing dividend investing videos about high yielders again, that in its own right is a signal. And it's a signal probably that sometime in the next few months, we're going to have another correction. Now, there are a few other signals behind that as well. I'm going to go into the state of California today where I live. This is the 5th largest economy in the world, and we are basically going on lockdown again. I want to talk about that in the video today because that's another signal. But even just the high yielder concept, it's funny because I noticed some other YouTubers in the space. One of the other big YouTubers who loves to talk about dividend stocks recently did a video about high yielders. And I start thinking, oh my goodness, are all of us looking at these high yielders again because it's foreshadowing the future potentially? It may be. That's at least one of my theories. And so I'm excited. I want to share a video, great video with you today about dividend stocks. Get ready, everyone. Let's talk about high yielders. All right, everyone. So I want to start with just some of the news here in California because it's another signal. And then I'm going to go into also some really interesting concepts today. So let's just start with the news. Just one day ago on Thursday, as you can see on the screen right now, Governor Gavin Newsom basically announced some new rules. And what these rules really meant is our state, we're no longer really looking at it by county. We're looking at it more by broader geographical region. And basically, unfortunately, due to this global pandemic, the ICU, the emergency room, intensive care unit beds, hospital beds are on shorter supply than they've been in the past. And a lot of regions, the ICU capacity is way down because all of those beds are, unfortunately, tragically filled up. And obviously, my heart goes out to anyone affected by this horrible pandemic, both health-wise and also economically as well. But basically, our governor said, hey, the new rule is this: if the ICU capacity dips to 15% or lower, the geographical region that you're in is basically going to go on shelter in place. And as you can see on the screen, the regions are basically Northern California, Greater Sacramento, Bay Area where I live, San Joaquin Valley, and SoCal. And basically what they were saying is all of these regions, except the Bay Area, this is the news from Thursday, we're basically expected to go on shelter in place in the next few days, and Bay Area was projected later this month. And what this means is basically bars, wineries, nail salons, hair salons, so on and so forth, they're going to shut down. Restaurants, they're going to be on takeout only. Retail is going to be at 20% capacity. And so obviously this is not very good for the fifth largest economy in the world. This is not good for small businesses. This is not good for consumers. It's a horrible time because we're headed into the holiday season here, which is supposed to be a cheerful time of year. And unfortunately, tragically, not only are people getting sick, but people are now also facing horrible economic consequences as well, which is just awful. But as an investor, when I take a step back and I look at something like this, it is a signal to me. And I think it is a leading indicator, along with the fact that the overall stock market is valued so highly right now that there may be a buying opportunity or a major correction around the corner. Now, I want to fast forward to today. Today is Friday, just one day after Gavin Newsom's announcement. Check it out on the screen. The Bay Area decided to take things to the next level. The Bay Area basically said, and not all of the Bay Area counties, but 5 of the Bay Area counties announced that they're just going to impose a stay-at-home order as early as Sunday night. And so they're basically saying, hey, San Francisco, Santa Clara, Contra Costa, you're going on lockdown Sunday night, Alameda on Monday, and Marin County on Tuesday. And I think what the Bay Area is saying is, hey, we don't want to even wait till this 15%. We want to be a little bit more proactive now. And now the whole ecosystem of everything here is really frustrating because the way, at least to my best knowledge, the way things are working right now is we are kind of the gating factor to all of this are the number of beds that are available in ICUs. And my understanding is when someone comes in there with basically has caught the pandemic, they are going to be staying in that ICU for some time. And my understanding is there are kind of secondary care facilities that with other symptoms perhaps or other ailments, someone on the mend could go there. But unfortunately, my understanding with this pandemic, those patients, they need to stay in the ICU. They can't really go to those secondary care facilities. And so what that's doing is it's kind of clogging up the hospital rooms, which is really sad. And so basically, where does that put us? It puts us that a lot of our state, if not all of the states, fifth largest economy in the world, is going to be going on lockdown, shelter in place, and it's going to affect consumers, businesses, etc. And so that's the backdrop of what's happening now, in addition to the fact that I'm looking at high yielders. But don't worry, I'm going to stitch all of this together. So I want to share a few different things that I'm going to stitch together. The next one is this concept of the slow motion train wreck. So one of my business partners who I really enjoy working with, he's brought this concept up to me before as it has pertained more to the real estate market. What he has mentioned in the past is that when real estate has gone through major corrections, it's kind of like watching a slow motion train wreck. You know the train is wrecking, but it is so incredibly painful and slow, and it is dragged out over such a long period of time that it is just one of these things where it's horrible to witness, and also it requires a lot of patience because you don't want to step in and buy real estate or invest in real estate too early in the slow motion train wreck. If the slow motion train wreck takes a few years, you want to wait till the latter part of the train wreck as an investor at least to purchase real estate. And so I want to use that analogy today for the stock market because I think we're in a similar situation here. It's actually very similar in my opinion. So check it out on the screen right now. And we know what's coming. In my humble opinion, what I see is record stock valuations. My aggregate portfolio now, I can't even believe how far it's come, how much it's worth, on paper at least, how low yields are getting, how some of my favorite stocks like StarBucks now broke through $100 when I was buying this thing at $50 just back in March and April, that is, 50s and 60s. And so the market has come so far, except some of these high yielders, which quite frankly are more like a proxy for a bond, and so I wouldn't expect them to come so far, such as PPL Corporation. So that's the one thing. It's come so far that I'm looking at high yielders, and so are the other YouTubers. We're seeing the cases of this pandemic uptick big time. We're seeing a state, California go on lockdown. I know in the United Kingdom, for example, and other countries around the world, these lockdowns are becoming commonplace. And if you are, by the way, from somewhere outside of the US or just from another state in the US that I'm not from, share your experience in the comments below. I'd love to hear what your experience is. We're a global community. And while you're at it, please smash the like button if you enjoy these types of investing videos and you want to show your love and support for this community. It means the world to me. But anyways, check it out on the screen right now. We know these things are happening. We can see the dominoes unfolding. But what's funny, well, nothing's funny about any of this, quite frankly, but it happens so slowly. And so as an investor, it's kind of, I was watching this video the other day, and one of the reasons it's so advised to make your bed in the morning is when you make your bed, you kind of get that gratification of accomplishing a task. And that's how investing is for me. When I buy stocks on a weekly basis, I get instant gratification when I'm buying a stock, and that kind of reinforces a pattern, and I keep buying. But what I need to remind myself here is, Ian, you're starting to buy these high yielders again. You know what's coming. You know that it's a slow motion train wreck. Tread with caution. Keep averaging in because you always buy stocks, but be careful. And so that's kind of the analogy that I'm using now, is I can see the train start to crash, but obviously the market hasn't done it yet. And so why pour all of my money into the market now when I can average in a little bit slower and build up a little bit of a bigger cash position for the future, which I think maybe January, February 2021, maybe even March, there could be some really good buying opportunities. And if I'm wrong, I'm going to be averaging in all the way anyways, and so that's why I'm always buying. It's a hedge against that, but I surely am going to be saving up some cash here. Let's keep going. Check it out on the screen. I want to just go through really quickly. I already covered this, but history repeats itself. Being a student of history is huge. I look for signals, and one of my favorite signals literally is looking at patterns in myself, kind of reverse engineering myself, if you will, understanding myself better. Like, I wouldn't have thought, but it's true. Maybe I'm a leading indicator here of what's to come because when I do these high yield videos, that's what seems to happen. So let's keep going. I'm doing this video, quite frankly, as a joke of sorts, because again, it was originally going to be about PPL Corporation, but I just had to change course when I reversed engineered what's really going on here. And so be prepared, be prepared. And so I want to keep going. What am I doing right now? What am I doing knowing what I know about the future? So check it out on the screen right now. What I'm doing is I'm not buying certain stocks like Starbucks anymore. I bought Starbucks in the 50s, 60s, 70s, 80s, even some in the 90s, not much in the 90s, but some. If I take the current share price of $102, I divide that by the 2021 EPS estimate, earnings per share estimate of 328, the forward PE is a 31. I don't really need to be buying Starbucks above $100. I just don't. But I love Starbucks, and quite frankly, I'm so excited. I get so many reports from all of you in the community. I get emails, I get messages on Facebook, I get messages in the Facebook group, comments here on YouTube. I don't respond to all of them, but I try to read all of them, and I really appreciate all of them. And I get reports every day about, hey, Starbucks in my area, there's a line around the block. And so that was always my philosophy, that pandemic or no pandemic, this business would thrive because it's a simple luxury that consumers these days, they're not willing to forego. They're just not. And yeah, a lot of people here don't want to spend a lot of money on coffee because they're frugal and they want to use the money otherwise to invest in stocks. And I can commend that as well. But most of society, they just want the simple pleasure out of a stressful day like we're facing now. And so Starbucks has done really well, and I get a lot of reports about that through the community. But again, I'm not buying here above $100. And so it's sad. I was buying every week. I'm just not doing it anymore. I can't do it. Let's keep going. So also, certain ride or die stocks, though, are okay. For example, I'll still buy Johnson & Johnson here. It's trading at a forward PE for 2021 earnings estimates of 16.7. That's not too bad, and so I will cautiously average into stocks like J&J. I'll pick up some high yielders, some contrarian stocks, and quite frankly, these are these are kind of all that's left at this point, other than maybe something like J&J. But I bought some PPL this week. I'm going to discuss it in the video. I bought BP pretty recently on the 14th of October. I bought it at 1670. It's already up 33% at 22.27, but I still think there's a little room to go, and so maybe I'll buy some more BP. I look at it as a contrarian play. I look at it as a high yielder. If I take the EPS of 22.27 and I divide by the 2021 EPS forecast, I get a forward PE of 15.6. So again, it's not great. I'd rather buy it in the teens. I really enjoyed it at the 16 level. I'm glad I got some there. And I also at that time bought the other oil stocks in my portfolio as well. But it's stocks like that I'm kind of looking at. I'm kind of keeping myself entertained with. That was the whole thesis for 2020. Back when I did that video in December, I thought that stocks weren't going to come down at that time. I couldn't have seen the pandemic coming in. So what was I doing at the time? I was just trying to keep myself entertained, keep myself busy. And how did I do it? I was going to buy the high yielders. And so that's how I look at it now. What am I doing right now? I'm just picking up some of these contrarian plays, some of these high yielders, some of these bond proxies, kind of to keep myself active in the market, keep myself entertained while I'm waiting for the slow motion train wreck to materialize. Let's keep going. So what else? I'm slowing down my buying. I have to consciously do that. I only made one big buy order this week, which was PPL. I'm getting ready. I'm preparing myself mentally. I've been doing a lot of stock analysis. I've been analyzing all kinds of stocks. I have a big watch list. When the buying opportunity comes, I don't need to analyze. I need to buy. I need to take action. And I am hoarding a little bit of cash, more than I would otherwise, so I'm ready for it. And so let's keep going. What I want to talk about now are a few wild cards. Now, obviously, I believe that this slow motion train wreck is happening. That being said, there are some wild cards that could reverse everything and could prop up stocks at the levels they're at or even higher, which may make my high yielder strategy, I may be entertaining myself with that for some time. And the wild cards that exist are one, the vaccines. And I am very proud of that one of my very own holdings, Pfizer, was the first to announce their groundbreaking vaccine. And so bless all the scientists who have been working so hard to make that happen. And so that is a wild card. If the vaccine becomes available quickly and can get into the hands of everyone that needs it very quickly, that could be a wild card that could get us back to business. It could get California off of lockdown. It could get other countries around the world off of lockdown. I think that could be a game changer, and at that point, all bets are off. I think that the thesis here of the train wreck is not going to materialize. Another potential wild card is a stimulus. Lately, the government has been in a stalemate with a lot of these stimulus talks, and it seems like when is the next round of stimulus coming? No one really knows. But if there is more stimulus from the federal government in the form of just writing people checks, if there is more stimulus from the federal government in terms of small business loans, that could help things. If there's more stimulus from the Federal Reserve in terms of printing money, in terms of who knows what they're doing, going out and buying securities even, that could really change things. And so those are some wild cards that could potentially happen. And so please smash the like button, by the way, if you're enjoying the video today. I love you all so much. I am just about to pass 70,000 YouTube subscribers, and I have my eyes set on 100,000. I cannot wait. Thank you to all of my generous patrons, too. We have 96 over there right now. Break 100 any day. I love you all. Your support really means a lot to me. And all of the thoughtful emails and notes and messages mean a lot. And so in the next segment of the video today, I actually want to go through PPL Corporation a little bit, the high yielder stock that I am buying. But before I do that, I want to pause for a moment and share a really important message with you all. So basically, as you guys know, for me, dividend investing is not just about living that good life. It's not just about living a life of financial freedom, a life of FIRE, financial independence, retire early. It's also about giving back and helping others. And over the years here on PPCE, and I have been transparent, and I have shared a lot of the charities that I like to give to, that I like to donate to. I've shared some of my work there. And on my website, lopuc.org, I even document my charitable donations. And I really want to thank everyone who helped me earlier this year raise money for Meals for Heroes. This is my friend Bernie's cause. And what he did with all of our help is he was able to provide so many meals to the frontline heroes in the Miami-Dade area for this horrible pandemic. And we as a community really came together and did some good work. This year, as part of the holiday season, every holiday season, I try to find something, a cause that I can rally around. And this year, my friend Sarah from Musicians on Call reached out to me because, in fact, this is the 4th year in a row where I've personally sponsored, my wife and I, my family and I have personally sponsored a hospital room. And so I have all these backstage passes for 2017, 18, and 19 that I hold in such high regard. If you follow me on Instagram, you've probably seen some of them there over the years. And I know Sarah said she has my 2020 backstage pass on the way because I've made my contribution for sponsoring a hospital room in 2020. And in fact, I'll show you really quickly what you can see here. I don't know if it'll work with all the lighting, but basically this is what it looks like. This is just a commemorative token that Musicians on Call sends my way as a backstage pass to commemorate the sponsoring of the hospital room. But basically what this organization does, you guys know I love music, you know I love hip-hop music. Music fuels me, it's my inspiration, it keeps me going in good times, in bad times, in stressful times like 2020 where I don't know what's around the corner, I'm kind of getting cabin fever being at home. It's been stressful, and what gets me through that is music. And I've been in the emergency room, as you guys know sometimes. I was there with a really bad choking episode one time where I had food stuck in my esophagus. I had to go to emergency surgery. It's awful. I've been in the emergency room a few times with dehydration from running or from doing all kinds of ridiculous stuff. And so over the years, what's helped me when I've been in the hospital? What's helped me when I've been in hard times? It's been music. It's been the healing power of music. It's also been God and my Lord and Savior Jesus, but it's been music as well. And so anyways, I'm a big proponent of Musicians on Call. What this organization does is they bring the healing power of music to people in the hospital who are in very dire, very difficult situations. Before the pandemic, they actually used to bring musicians into the actual hospital room who would play music for the patients so that the patients could receive the healing power of music. This year, because of the pandemic, they do it through technology, but they're able to bring music and musicians in real time, live, to these patients, and it provides so much value. And so Musicians on Call is a really important organization that I am rallying behind this holiday season, and I'm asking you kindly to consider chipping in as well. I will include a link in the description below, in the pinned comment below, if you would like to contribute. No amount is too small. Crowdfunding, that's what it's all about. Any amount that you can donate will make such a difference this holiday season. It will make such a difference for people stuck in the hospital, and especially during this awful pandemic. And so with that, it is my pleasure to share a quick clip with you all on the screen from Musicians on Call. I am honored, actually, that the president, the CEO of the Musicians on Call organization, Pete, he is going to share a quick message with our community. So check it out.
Hey, this is Pete Griffin, President and CEO of Musicians on Call, and I want to thank the entire PPC Ian community for all your generous support of our mission to bring the healing power of music to patients and caregivers across the country. This year, we're trying to reach a record 100,000 people, which is really important given the pandemic, and so your support allows us to do that and allows us to really impact the people that need it the most right now. So thank you all for being on call for Musicians on Call, and I hope you all have a great holiday season.
So I hope you enjoyed that clip. Pete Griffin, thank you so much for your incredible words. Really appreciate it. And again, everyone, if you'd like to contribute, it would mean the world to me, and it would help so many people who are in the hospital this holiday season and beyond. Now, with that, I want to transition into the next segment of the video today, which is PPL Corporation. Check it out. And so PPL Corporation is a regulated electric utility. They own businesses in the U.S., in Kentucky and Pennsylvania, I believe, also in the United Kingdom, in the U.K., although they are going to be selling their U.K. division. I'll get to that in a minute. I look at it as a bond proxy with a buyout option. Basically, I look at it as an inflation-indexed 5.8% dividend yield in perpetuity. The reason I look at it that way is on average, they raise the dividend by about 2% per year over the long term. So it keeps up with inflation. But there's this buyout option, because why are these guys selling off their UK division? I think they're doing it potentially to prep themselves to get bought out, and we'll get more to that in a minute. So with PPL Corporation, it's trading at, where I bought it was 28.44, and it's still trading around that range. The PE on a forward basis this year and next is in the 11s, which is, as it should be, a company with not much growth, little growth. PE in the 11s, a regulated electric utility, makes sense. Dividend per quarter is 41.5 cents. Per year, 166. That's how I get my 5.8% yield. And so the dividend in 2015 was 37.7 cents. And so it's a 5-year dividend compound annual growth rate of just about 2%, 1.9%. And that's how much they raise the dividend per year on average. Now, I want to get into some news and some information with PPL really quickly. Check it out on the screen right now. And so the first thing I want to go through is this notion of the board of directors. And so I also own stock in Southern Company. I love Southern Company. It's one of my favorite stocks of all time. And one of the things to note about Southern Company is one of their board of directors, one of their former executives, if you will, or I guess their former CFO, is now on the board of directors of PPL. Why would PPL be doing this? Why are they selling their UK division? They actually just bought the UK division a number of years prior. Why are they selling it? It's also a very high margin part of the business. I think the reason they're selling it is there's just so much political uncertainty. Now, my understanding in the UK, at one point, they wanted to nationalize the electricity, which would basically make PPL's UK division worthless or render it worth a lot less. None of that passed, but my understanding is the UK division is safeguarded from that dynamic for a while at least. But that said, that could always pop up again, and I think PPL Corporation is cognizant of that and probably doesn't want that risk in their portfolio. And I think the world politically has changed so much since they bought the UK division that they're having second thoughts about it. But I also think there's something going on with this Southern guy from the Southern Board of Directors that could be a leading indicator that maybe there's a buyout coming in 2021. And that's why I look at it as a 5.8% yield, but there's an upside. It's kind of an upside option that, hey, even if they never get bought out, I'll just collect my 5.8% inflation indexed in perpetuity. But if they do get bought out, wouldn't that be cool? Because I get a little more kind of a kicker, if you will, on the upside. And so that's how I look at this stock. Let's keep going. And so with that, I want to look really quickly at their recent earnings that were announced just recently on November 5th. Basically, their earnings came in at 37 cents versus 58 cents last year. At first glance, that looks really bad, although I'm going to look at the statement of cash flows in a minute that will show you why it's not so bad. And really the reason for that is there was some one-time tax law changes in the UK that created some kind of one-time charge that affect the GAAP EPS but don't affect their cash flows. And so when you actually adjust, you can see lower on the screen here down now a few paragraphs, actually one paragraph from the bottom. If you adjust and look at a non-GAAP EPS, which takes some of those factors out that skew the numbers, basically they earned 58 cents this quarter per share versus 61 cents a year ago. And so during the pandemic, to be basically flat, slightly declining, I think that's not bad performance, because you have to think all of the office space that they basically provide electricity for, a lot of that office space these days, it's not being fully utilized. They're not using as much electricity. A lot of people are working remotely. A lot of people are working at home. We're in the middle of a horrible pandemic, and so all of that factors in. But even putting that aside, this is a business that's not really growing. Again, it's a bond proxy. It's a bond proxy. It's not necessarily a growth story. It's not necessarily something you'd even want to necessarily compare against the kind of S&P index, if you will, in my humble opinion. So with that, I want to dig into actually a paragraph I pulled out from their earnings release as well. So check it out right now. One of the things that dividend investors do wrong is sometimes, or any investor, sometimes they just look at the top line and they don't read into the details. And if you look at the top line at PPL, it's not that good. Oh my gosh, they earned 37 cents, whereas they earned 58 cents a year ago. But when you look into what's on the screen right now, you can see 2020 of the third quarter included a net special item after-tax charges that affected 21 cents a share, primarily from the impact of UK tax rate change on deferred taxes. So basically, there was a tax code change in the UK. It seems like it was one time. They're getting out of this business anyways, but it affected the numbers. And so that's why I like to look into the fine print. And when I actually look into things a little bit further, it looks from an operating cash flow like they're doing just fine. So check it out on the screen right now. And again, when I look at things like this, sometimes you have to be careful with adjusted numbers, because adjusted numbers, sometimes they're playing games. Maybe they're trying to fool investors with the adjusted numbers. I don't know. But when I actually look at the statement of cash flows and I drop all the way to the bottom, you can see net cash provided by operating activities. I got 2.2 billion versus 1.88 billion. And so basically, the company is doing better. The 9 months ended September, and this isn't just the third quarter, but it's the 9 months. But still, year over year, when you look at 2020 versus 2019, net cash provided by operating activities, it is up. And then I kind of look higher up here, and you can see a line that's kind of big, deferred income taxes in there. And so basically, I look at something like this and I feel comfortable that, yeah, the EPS was down in Q3, but when I dig in a little bit, to me, that doesn't skew my opinion of this as being a solid company that is able to pay my dividend, that is doing just fine, that is a good bond proxy. Now, personally, the UK sale is something that is a little bit of a wild card, just as there's some wild cards overall with my theory right now of the slow motion train wreck. So we shall see what happens in the months ahead. But put in the comments below what you think about PPL Corporation, what you think about the video today. It would mean the world to me. Before I leave today, in terms of full disclosure, I am long PPL Corporation, ticker symbol PPL. I am long Starbucks, ticker symbol SBUX. I am long Johnson & Johnson, ticker symbol JNJ. I am long BP, ticker symbol BP, Pfizer, ticker symbol PFE, and Southern Company, ticker symbol SO. I own all of those in my personal dividend stock portfolio. In terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed investment advisor first. Thanks for watching, everyone. Please don't forget to smash that like button. I love you all. I will see you in the comments below and in the next video.